Diablo. Nah, it's just Activision, guys. Blizzard, atvi. That is a viewer request from Tango on StockTwits. And I love checking out new charts, even if they're not close to maybe a stage 2 breakout or a stage 4 breakdown, just to practice my framework, going through the gathering of evidence and seeing where this settles, where the next break lines, identifying those levels. So when you're prepared, the next time it moves and then it morphs and the chart morphs and you get to those important support areas or resistance areas, you are ready to go, guys. NASDAQ, technology sector, in the internet services. I love Diablo, man. Woo. Back in the early 2000s, when there was a posting to go work at Blizzard, man, I was, what? Like, dream job. But I didn't quite make the jump over there, living in Canada and Quebec, a little far off from their headquarters in California. It could have been sweet, though. All right. What happened here? Monthly defined top or support. Here, close of that candle telling me price action won't go lower. Buyers coming in. Price action below. Oh, that's the wicks, the noise. Same here. Price action went back up, but closed below 12-month average. So if you're going long, if you have a close below 12-month average, it's a big warning sign to stay on the sidelines. Don't necessarily short, but you don't want to be there. Move average still going up. And now the next month, that price action just timbered. Then it closed super low. How was that? Wow, 27% in a month. And you already had 17% here. And I don't know, the psychology of it hurts, man. When you're up here, and then goes down 17%, so I'm going to wait for it to go back up. But you're starting to get clues you shouldn't be there anymore. There's a reason it went down 17%. And even if it goes back up, the next candle, it's going to need time to work through that, digest all those buyers are going to be selling, creating that resistance. So when you're early in the uptrend, you still have a lot of fuel. You see every time it went down, these are still a couple of months. You need to go back above. Went down. You're still like above the 12-month average going upwards. But when you start moving sideways, you have higher volatility candles. Those are warning signs that you're starting to top off, guys. You want small, steady steps. Don't wake up those sellers. Go up slowly. Big warning sign right here. You should take your profits. Even if you're down 17%, you say, eesh, I'm out. Stage analysis, you never get in at the bottom. The ultimate bottom, you never get in at the ultimate top. Here is some more monthly defined support. Gap down. So I'm using that open from that green candle. So that's an area of support. Went right through it. Where's the next one? There was a little bit here, but it's not tested often. I rather these are multiple tests, multiple sinking through that support. And right here, what's happening? We're hitting monthly defined resistance turn support, what I call a wall. And here's my final level down here for now. Natural support right here. So what happened? It went back down. Doop. All through these levels, they didn't hold up very well. Price action was too strong, the selling pressure. But right here at these levels, we're starting to hit that consolidation patterns, resistance turn support. Price action was all the way up here. It gapped down. Price action came all the way back up here during the month. Sellers came in and they brought it to halfway there. So still in the downtrend, very far away from the 12-month average. We're going to look on the weekly, but unless this pulls back, let the 12-month average catch up, pulls back maybe up to here, and you get an entry off maybe here. There's no short entry possible in a low risk environment, guys. You have more chances of this bouncing up than continuing the breakdown right now. Since you're far away off the 12-month average, there's a good chance you might be pulling up and hitting these monthly defined supports, turn resistance, guys. Okay, let's zoom in. Stan Weinstein. Here are my dribbles. Huh. Dribbles. Huh. And dribbles. I'm going to leave the monthly defined support lines. Turn resistance on. They're still valid. Price action. On the smart time frames, they could sink through, but at the end of the month, they're going to have a tendency to close above that monthly defined breakdown line. If they close below, then at the end of the month, that means you're breaking down, guys. Stage 2, stage 3, price action starting to thread to go on both sides of the 30-moving average. And right here, weekly defined breakdown line, huge red candle, huge volume. Severely underperforming. Hey, don't like, go down. No, severely underperforming the SPX. Clues. Huge red candles, huge volume on those down days. Even here, more huge red volume. And on those green days, small contracting volume. What's going to happen here? I'm not sure. We're far off the 30-week moving average. We're below a declining 30-week moving average. We're starting to create Ichimoku cloud-defined resistance that we have to go through. It's really, really hard. You can't play. You can't be long a stock that's below the 12-month moving average, that's below the 30-week moving average. This is a wait and see type scenario. So you have to wait, let the 30-week average catch up. Could bounce back up here, down, and then up. And then once you're out of the cloud, once you have all those earlier and during the year, I was doing more stage 2 breakouts than stage 4 breakdowns, because that's what the market was trending in. And you could go back to the earlier podcast and you'll see the triple confirmation. You want the Mansell relative strength. You want to be outperforming the SPX. You want to be above an inclining 30-week average. You want to be above Ichimoku cloud-defined resistance. You want the higher trend in your favor, but we're not there yet. And it's very hard to short. This is not the type of short I like. You'll see distance from the 30-week moving average. Look how far we are away. It could stay far away for a while and slowly creep up. And then after that, if it gets close, then you have to evaluate, is the market still in the downtrend? Are we hitting monthly defined support and resistance? Is the 12-month or 30-week average protecting me? Then you could probably enter here and then short on the way back down. But until then, this has done a good move down, hitting monthly defined support, but there's no low risk short entry. This could bounce back up and trigger any type of sell stops. Unless you put them super high, you might get triggered out. So I would wait for a pullback close to these monthly defined support and resistance, or wait. You have to wait. There's so many stocks just breaking down or pulling back close to the 30-week moving average. Those are stocks you want to play A++. You can't play all stocks. This one would have been good entry. Let me put back the stand profile. Even here, it broke down so fast. This was the breakdown candle that you would have wanted to play, but it went down so fast that and it didn't pull back up. And that's what happens. Sometimes you have fear, panic, settle in, and you didn't get a pull back to the breakdown line. So the entry, you couldn't get it here, too far away. You couldn't get it here because it didn't pull back. You could have zoomed in on the daily. Let's see if we have a gap down. Woo! And look at that. You see that huge green volume? You got to be wary of that, because if I zoom in on the, let's say, 4-hour chart, still a lot of green volume here. I'll zoom in on the 1-hour chart, and you'll see that most of that volume was, is that the same time frame? Hold on. Most of the volume was on during that day was on red volume, guys. Let's go back up 4 hours. Oh no, I'm all the way here. Hey, Pat. Okay, let me circle right here. Whoa. Zoom in on the 1 hour chart. Oh, scribbles. See, red volume. So even if you had a green volume at the end of the day, on the 4 hour, drill down all the way to the 1 hour until you see where the majority of that volume happened, and you see it happen mostly on a red volume. So very negative sign. Okay, let's go back. Stand. Reset. Even, okay, on the weekly. Let's go back to the daily. Gap down on the daily. You could have zoomed in. You had some price action here below. I think must be the beginning of the week. The Friday. Okay. Yeah, and a gap down. Monday. So Thursday. This is probably a Thursday. Friday, and then Monday. So it gapped down on Friday. So you didn't have the close of the week. So it's always dangerous to not wait for the weekly close. So technically, just the way this played out, you didn't have the weekly close below that monthly defined breakdown line. Could have took a gamble that was the entry you wanted to take. But on the daily, you increase chances of whipsaws. It's always better to wait for the weekly close and the monthly close. And on the daily, are we any signs of us going back up, getting close to that 50-week moving average? Still a lot of overhead resistance. You're still not, even on the daily, you're still not out of the cloud. You have to start by going over those fast moving averages. You have to start going over that cloud. And when the smaller time frames start turning over, then after that you go to a higher time frame, the weekly, and then it should start turning over. Then you could think about taking a position. But until the daily turns over, the weekly definitely hasn't turned over, and the monthly neither. Far off from 200-day moving average. Woo! All right, Blizzard, I love you. Don't go bankrupt. Okay, big move down already, but can't short from here and can't go long from here, guys. So come back to you later, Blizzard. Thanks for watching, guys. I appreciate it.